Hello, my name is Nick Quinn.
And I'm Shane Vernier.
And I'm Connor Woods. We are the market analyst team at howtotrade.com, and together we're going to explain everything you need to know about trading the ascending triangle pattern. So let's get started.
An ascending triangle is a bullish continuation pattern, and it typically tells the trader that the bullish move that we're in is about to continue moving higher. It's very easy to spot on a chart and very common across all markets and all time frames, and it's the exact opposite of a descending triangle pattern which you'd find in a downtrend. The distinctive feature is the upper trend line resistance level that is always horizontal, and it acts as a kind of ceiling to contain price before it eventually cracks the ceiling and then moves higher to carry on the uptrend. So let's have a quick look at exactly how we'd go about identifying it. The ascending triangle is a really simple and easy pattern to spot in any bullish market. It tends to occur at the end of a move and is showing us price consolidation before it then breaks to the upside. Two very distinct features. At the end of the move, we'd be looking for price to basically hit into an area of resistance, and that resistance line that we were drawing, it always has to be horizontal. On the opposite side, the support structure would always be diagonal. If you were to connect the lows, you need at least two higher lows to validate the structure. And as price then continues and starts to compress against the ceiling, eventually it's going to break higher. There's different ways you could trade this to the upside as well. You could maybe potentially look for a breakout candle and then trade the close of that candle to look to buy the market, go long, and then look to for the market to continue higher. When it comes to setting a stop loss, I would always advocate putting your stop loss on the opposite side of this trend line at some point along the way. So maybe potentially if you're more aggressive down here, or even more conservative under this particular low, or even under that particular low. But that is the way that we would identify an ascending triangle.
Okay, so let's look at an example on how we can actually trade this, and we're going to use the breakout trading strategy for this one, because breakout trading is one of the most popular trading techniques that enables traders to use these technical indicators and chart patterns. Now, like most candlestick patterns, there's a logic to the ascending triangle pattern, and what we want to do is we want to find that breakout level and really enter a position once the price of the asset breaks above or below a certain level. In the case of an ascending triangle pattern, the upper trend line acts as the resistance level, and then we want to find a lower trend line which is trending in the bullish direction. So when we get these drawings on the chart, you can see exactly what I mean. We've got this rising lower trend line, and we've also got this upper trend line, and these lines are converging to form this triangle pattern. Now, what we want to do, first of all, after we've drawn the chart pattern, is we want to find that breakout candle. You can see we've got that here. So as a trader, maybe a position that you'd have taken could have been entering a long position at the closure of this candle with a stop loss just below the ascending trend line. You can do it at any point along these lows. Let's say, for example, we did it just below this ascending rising lower trend line of this triangle pattern, and you can actually see that we created new highs here, and we achieved a really, really nice 3.92 risk reward trade, and that's how you can use that breakout trading strategy in the ascending triangle formation.
Okay, here are the pros and cons for the ascending triangle pattern. On the pro side, ascending triangles are easy to recognize in the live market. And unlike most chart patterns that indicate a trend reversal, the ascending triangle pattern is a continuation pattern, so it is a trend following pattern. Also, by using the measuring technique, take profit target levels are clear and concise, so we have a finite, definitive market exit point. Now, cons. The chart pattern rarely appears in perfect formation, so there is a bit of discretion involved in its identification. Also, stop loss placement is not well defined. It can be either a function of risk versus reward ratios or loosely based on the triangle pattern itself. And lastly, the ascending triangle pattern is more suited for day traders and scalpers, and not necessarily swing traders or longer term investors. Now, let's review some of the key takeaways from the ascending triangle. Number one, the ascending triangle is a continuation pattern that appears during a bullish trend. Number two, the pattern helps traders find entry levels during an ongoing uptrend. Number three, the ascending chart pattern is comprised of an upper horizontal line with at least two highs a rising lower trend line with at least 2 rising lows, and an intersection. Number 4, when using the ascending triangle pattern, a trader will enter a long position at the time of the breakout. The measuring technique is useful in determining those take profit levels. Now, if you want to learn more about the ascending triangle pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you exactly how to incorporate ascending triangles into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain that valuable market experience. Then, once you're ready, feel free to join our How to Trade Funded Trader program.